Hi, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and as usual, just going to start with my macro outlook. Okay, let's jump straight in. So last week was more about sort of geopolitics than the economy. Obviously, we've got this situation with Israel and Hezbollah, and also Iran there, and of course the war hits the 1 year landmark on Monday. So after Iran fired almost 200 missiles at Israel, the world is pretty much waiting for that response. Now, this happened once before, and it was really a token gesture from Israel, and of course that was criticised by parts of the government and also some of the citizens. Now, is that going to be the same this time, or is it going to be more meaningful? And the concern is that, uh, maybe Israel will aim at some of Iran's nuclear energy stations. Uh, and then, if that's the case, then that's likely to escalate the conflict considerably. I did warn in last week's YouTube and also in my daily newsletters that Israel would cross into Lebanon. And of course, we should not forget that Houthi as well, because they continue to attack any ships in the Red Sea, of course, under certain flags. And because of that, the US and UK launched airstrikes against those camps. Uh, where do we go next? Okay, so Ukraine. So Ukraine and Russia. I mean, it seems to have been overshadowed by what's going on in the Middle East, isn't it? However, it is just as important. So we still need to keep an eye on that. And of course, it's down to all its allies to make sure that it's got the arms that it needs and the funding that it needs to continue to hold off Russia. And of course, if not, the Russians are pretty well armed for sure. So, it's very important that. Now, okay, so let's go back to the economy and the markets. So, US jobs data was better than expected on Friday, with NFP coming in higher. And of course, unemployment dropped back as well, back to that 4.1% from 2 months ago. Which obviously will please the Fed and possibly the Democrats as well, with the election now just a month away. So a soft landing for the US is still possible. It's not really surprising with all those trillions of dollars that was injected into the economy over COVID. Now, oil rallying last week, and of course, there's potential for further gains. It's all just going to really sort of play out depending on the events in the Middle East. Oil's one of those things you can always find arguments for it to go up as well as for it to go down. And of course, China stimulus was pushing commodity prices higher. Now, question there is, could this actually sort of prevent inflation dropping down and reaching the central bank's 2% targets anytime soon? We're still seeing energy and food prices remaining high, and that is a risk. WTI rallied $7 from its low last week. So although the COVID cash has disappeared, obviously that was some time ago now, households seem positive about spending. I'm talking about the US here, especially as they see interest rates fall. The only real negative is the actual cost of living. Those prices themselves, they've just risen so high. Again, especially for food. And of course, that's because the supermarkets and the food companies know we need to eat. And we as the consumer, just be honest, we're just getting ripped off just to increase their profits. France and Italy are looking to tax companies more. Perhaps other countries should do that too. Now, there's tension between the EU and China, And that's going to increase quite a lot after last week's decision to place tariffs on China's EVs, which is going to be up to 45%. Of course, Germany was fighting to either get that watered down or actually stopped, because they're likely to be the most impacted when China retaliate. Now, I've mentioned a few times Europe need to rethink the crops. They obviously what they've been growing now, it's getting more difficult because of the higher temperatures, to the point now where France is cutting down vineyards due to the lower demand for its wines, and of course the poor harvest due to the weather. Okay, so that's that for Europe. Now, even the US election seems to have been almost ignored last week, although Trump sort of revisited where the assassination attempt was made, with Elon Musk along as his bodyguard. Well, maybe. I'm sure he had more protection this time and they looked after him a bit better. Musk is a big supporter of Trump's, and you have to wonder why there, I think, a little bit. Okay, moving on. So apart from the big rally in oil last week, the stocks and gold consolidated, the dollar strengthened, a little bit of haven trade in there. And as I did mention last week, I thought the dollar was undervalued. Obviously, I didn't expect it to have a increase because of what's going on in the Middle East, although obviously I'd mentioned what was going to go on in the Middle East, but saying it and it happening is quite often two different things. Although, if you follow these every week, you'll know that I'm pretty accurate anyway. Bitcoin fell after the previous week's rally though. Fed funds are now around about 4.83%. Now, this is my expectations, remember that. So I expect them to finish this year around probably 4.35%. And then next year to drop to probably 3.25%. And then finally stop possibly as low as 2.5% in 2026. Maybe they'll get there, maybe they will stay a little bit higher, but don't expect anything lower than 2.5% is my argument. Because I think that will be the low if it gets there. But just remember, that is only my view. So next week we've got FOMC minutes and US inflation data, CPI, PPI. In the UK, GDP. And of course New Zealand is expected to cut rates, and that could possibly be 50 basis points. Now there's loads of other data out from various countries next week. Plus, there's just so many Fed speakers, and so it's going to be a interesting week for sure. Just be cautious with your positions. Expect some volatility, and of course, keep your ears and eyes open for what's going on in the Middle East all the time. And that's about it. I would just like to mention that I'm doing some free courses at the moment, some free 3-day trading courses. If you're interested in them, October's pretty much full now, but I've got some spaces left for 2 in November. The first one starts on the 11th of November and the second one starts on the 25th of November. So, whatever level you're at, there's going to be something in there that's going to help you. If you're just looking to get going, then it's going to be the perfect course for you. So I just thought I'd mention them. Okay, so there's another couple of slides and then I hope you'll stay with me because I'm going to move on and do some technical analysis on just a few of the products that I trade. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's 1-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but you know there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1 week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market, and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice, and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis.